2022. Companies are flush with cash. Valuations have moved up, as well as company share prices. And so companies might also use that as a way to acquire other companies.
And Nadia, I love catching up with you. Today, no different. It's good to hear from you. UBS's Nadia Lovell there on this equity market. The path forward, a simple one for UBS. I know a lot of this is crystal ball type stuff, but we're really trying to paint the expectations on Wall Street at the moment. And this is from UBS. They have a June target for next year. They have a December target for next year. It's 4,800 and 5K respectively. The S&P 500 closed yesterday at 43.63. Tom, the equity market for them is going higher. They like the cyclicals. They've performed well recently. They expect it to continue.
Check the calendar, John. This is no different than Jim Suva over at Citigroup modeling out free cash flow at Apple into 2024. This is where we begin to see not so much an extrapolation, but really thinking about the backdrop of economics that we cover every day and what it means. And so far, what I'm seeing are very constructive views forward through 22 and into the following years.
UBS and RBC may be on the one side, Tom. On the other, Lisa, is pretty clear. Morgan Stanley, Bank of America, far less constructive.
They're threading a needle, all of these analysts, and we heard that from Nadia, this idea that all of this optimism bleeds into great earnings, but not necessarily a more hawkish Fed. That is a key question, because right now in rates futures, you could see 1.5 rate hikes priced in by the end of next year. Basically, if we get to 2, as she was saying, that could disrupt the projection for the S&P 500 and target. So this is sort of the dilemma. How do you get that optimism, that strength, without a hawkish Fed?
You need a voice, a smart voice, and that smart voice today, Tom, is Adam Posen of the Peterson Institute. What a timely conversation coming up, Tom, on this inflation dynamic.
Yeah, I think John, I agree with that strongly. This is a year at IMF World Bank, and we can talk to Dr. Posen about all going down at these meetings. But overwhelming that, John Farrow, is the inflation debate. I think it's a good idea. Stay on that with Adam Posen.
We're going to do that next, Tom. From New York City this morning, Tom Keene over in D.C. alongside me, Lisa Abramovich. Your equity market is doing better than good. It's up 0.9% on the S&P 500. Citi in the pre-market. The numbers, the results, the earnings okay. Up by 1.27%. Morgan Stanley better than okay. That stock is up by 2.36%. And Bloomberg is catching up with James Gorman of Morgan Stanley at 10:30 Eastern Time. From New York, this is Bloomberg.
Asset management.
The world's financial decision makers connect on the Bloomberg terminal, sharing ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
Who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
NJIT makes innovation happen. It also makes entrepreneurs like Anya O'Dwyer. Founder of Innovate, a tech-driven civil engineering and construction management firm, Anya says NJIT is defining the future.
NJIT is extremely important as a hub of disciplines, all in one space, with all of these brilliant minds. NJIT's role is huge when it comes to defining the future and how, from an interdisciplinary point of view, they have it all there, whether it's the innovation hub, the maker space. NJIT is already creating that collaboration between the disciplines, and you have civil engineers speaking to programmers, speaking to electrical engineers, and together they're creating advancements that we wouldn't have been able to do without those three minds coming together and solving a problem as one rather than solving it in isolation.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Retailers are working hard to recapture what they lost during the pandemic, but they're worried you might be disappointed over the holidays. A survey found that 3 out of 4 U.S. retailers said shoppers expect more from them than they can deliver because of the labor crunch. The survey comes from the workforce management firm UKG. Twitter wants its users to be nicer. The social media platform has spent the past year trying out subtle tweaks aimed at encouraging healthier online behavior. In some cases, if users try to tweet something deemed mean or offensive, automated pop-ups now ask them to think twice before doing so. Are those reviews you're reading online authentic or fake? The Federal Trade Commission is taking aim at the fake ones with a warning that could bring potential fines to Amazon, Facebook, and other companies. The agency sent a notice to more than 700 companies that they could face fines of up to almost $44,000 per violation over fake reviews. Gina Cervetti, Bloomberg Radio.
Economics.
Chairman Powell looks brilliant.
Finance.
Some breaking news for you. A share sale.
Investment.
The narrative of the reopening trade has changed.
The Bloomberg Surveillance Podcast.
Do you want some volatility, Tom?
Please.
Do you want me to go there?
Tom Keene, Jonathan Farrow, Lisa Abramowitz, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts. When unprecedented events are unfolding, it's important to let history teach us.
Do you think it's a different world for the Fed?
Bloomberg Balance of Power with David Weston. Weekdays at noon Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
This one buried through the morning because of the bank earnings from New York City. Some initial jobless claims data just around the corner. Mike McKee's going to be with us to break that down. Going into it, equity futures up 40, advancing 0.9% on the S&P 500. The equity market looking good. Some PPI numbers out, claims just around the corner. Let's break this one down with Mike McKee. Morning, Mike.
Good morning, John. Well, the producer price index is out, and it is a little bit better than forecast. We were expecting a 0.6 increase in final demand on a month-over-month basis. We get a 0.5 increase, which means the year-over-year number goes down to 8.6. Well, it rises to 8.6%. It was expected to be 8.7. So it's still a significant increase, but it is not what had been expected. The core is up 0.2. That is a lot less than the 0.5% that was expected in the 0.6 of last month, and it pushes the core rate down to 5.9% on a year-over-year basis from 6.5%. So it does look like we are seeing some significant declines in the core side. Final demand for goods is up 1.3% in September. That's the largest increase in since May. In September, 40% of the advance, a 2.8% jump in prices for energy. So energy is starting to feed its way into the overall economy. For services, which is what everybody watches because we are a service economy, up only 0.2%. It is the 9th consecutive advance, though. The increase was up for the most part because of food and fuels. Also, the same kind of story for services as we're seeing for goods. So looks like PPI is the kind of thing that is going to be like CPI yesterday, a chance to debate both sides of the issue.
Right.
Initial jobless claims. Here's the good news of the day. 200. I see John smiling in the studio. 293,000. That's a drop from 326,000, which was revised a bit higher to 329,000. So a significant drop below 300,000. So that is some good news on the jobless claims front. And this is more what we were expecting than that brief bump we had in September.
This is what we want to see, Mike.
Things went up. This is the kind of thing we thought we'd see when we got to September and the benefits were cut off and people were, in theory, going back to work.
Mike, thank you. Tom, back below 300K. It's what we wanted to see.
Yeah, it's an emotional. I don't have the chart in front of me, but as I've said, it's a very elegant trending chart, and that trend is to a better outcome there. We certainly saw that with the unemployment rate, I should say, in the last report. This is a tradition of our IMF and World Bank meetings, John. Adam Posen joins, president of the Peterson Institute, that barely describes his contribution to international economics, a particular focus on Germany, and a really classic moment a number of years ago with, among others, a guy named Bernanke on inflation targeting. John, we'll get to that in a moment. But, John, I understand you understand how sensitive and woke Adam Posen is.
We'll find out how woke Adam Posen is in just a moment. Larry Summers, the former Treasury Secretary Lawrence Summers, saying in the last 24 hours the following, Adam. Help us out with this one. I'd love your reaction. Quote, "We have a generation of central bankers who are defining themselves by their wokeness." Goes on to say they're defining themselves by how socially concerned they are. Adam, open one for you. What's your reaction to that?
I don't think that's fair. If you want to worry about wokeness, yeah, there's universities you can worry about, there's various individuals, but the central bank is not stomping on alternative voices. It is not saying you can't worry about inflation because we're too worried about unemployment. There's open debate. I just hosted Raphael Bostic, Federal Reserve Bank of Atlanta president, at the Peterson Institute earlier this week. He gave a speech that sounded relatively hawkish. He talked about inflation expectations, and at the very end I asked him about inequality, and he gave the same answer that most members of the FOMC would. It's entirely right for the Federal Reserve to do research and draw attention to the inequities in the society. Monetary policy has to be focused on the aggregate output, aggregate inflation.
The latter point's the really important point, though, Adam, whether they have the tools or not to address it or not. It sounds like President Bostic doesn't think they do. Do you think there are some on the Fed, though, that believe they do and ultimately want to do something about it?
I think those on the Fed who care about these things deeply, and that's most Fed people, but if you think of the various Fed presidents, there's a lot they can do in their districts. There's issues of bank supervision. There's issues of redlining in housing, where the Fed played a huge role, first in ignoring it and then drawing attention to it. There's issues of education. There's issues of documenting and putting out there what are the disparities. But no, I don't see anybody on the Fed committee who thinks that you're going to use monetary policy to solve inequality problems. And the point is, you can worry about inflation and argue about whether or not inflation's getting out of hand without talking about people's motivations and assuming some kind of soft-headed plot.
Dr. Posen, you have the joy every day of working with Olivier Blanchard. He wrote about the unlikely but not impossible, the modern inflation dynamics we're in. He made worldwide headlines 11 years ago talking of a 4% inflation. We're there. But this is very different, isn't it?
Yes and no, Tom. I mean, Olivier and his co-authors made headlines a decade ago calling for a 4% inflation target because the 2% inflation target Bernanke, Michigan, Laubach, and I and others had pushed didn't take into account enough the zero lower bound and us not having effective monetary
policy. So have we
policy.
committed the experiment Professor Blanchard talked about?
No, because the Federal Reserve and the Congress have not said, hey, inflation's up, let's grab that and say, now that we're here, let's raise the target. Myself, Joe Gagnon at the Peterson Institute, we've been out there saying 3+, now is the time, just like you set.
So do we need a regime change? Do we need a bullet regime change right now to rephrase our generational belief in 2% inflation and say, hey, this is the new normal?
I personally think yes, and it's not a regime change, it's a resetting of the target. One of the problems that we didn't foresee when we put in place inflation targets was we assumed, it's in the books that we wrote, we assumed that you would be able to reset the target as economic knowledge and circumstances change it. We've never seen targets get raised for inflation targets. It's like an exchange rate. Once you set it, you're scared to move it. And so, as I've said to you, I think before, Tom, but I'm glad we're talking about this right now, we should be opportunistically reflating. We should be saying, okay, inflation's now above 3%. Let's re-anchor it there.
So what do you say to people who argue maybe not stagflation, maybe slugflation, that basically this will slow growth and that prices will come back down naturally? Why do you say that that is not the case, that we are in a regime change, and what data are you pointing to?
Well, just to be clear, I'm saying we're not yet in a regime change. A regime change would be either a fundamental structural shift or the Federal Reserve upping the target. What I do think is happening is we've got so much accumulated weight from these generations of central bankers who were hardly woke and paid too little attention to unemployment that you see the 10-year bond, no matter what fiscal and inflation happens, inflation expectations don't go up. And we saw this in Japan, and we've seen this in the euro area. It should be a two-way bet that there's some variability in inflation expectations, and that gives you the flexibility to cope with the kind of structural
Adam, I've got to jump in. What you're saying is so important. You think that the way they should communicate this is not by making up excuses for it, just by saying this is what we want to see. Is that right?
Yeah, we're fortunate enough to now have a bit more headroom from the zero lower bound. We're fortunate enough to have enough inflation space that the economic adjustments to the labor market need to be done. There was a great paper at Jackson Hole this summer talking about how you get better labor market adjustment when you have loose policy, which is what I said back in '98 on Japan. You should be opportunistically reflating and raising the inflation target and consolidating what we got. And then if that means the 10 years up a little bit, the yield curve steepens a little bit, and there's two-way risk on inflation expectations, that is a win for the economy. That is a win for the Fed.
Except that the bills are getting bigger, and we have to refinance debt. How much is this a concern? What is the threshold for the 10-year Treasury yield that the U.S. economy can tolerate, given the deficit?
It's the 10-year yield doesn't have a single threshold. I'm sorry to be pedantic about this, but this goes back to Blanchard, right, and others. What counts is R minus G, the differential between what interest rate you're paying and how much the economy is growing. And if the economy is growing at the rate it's now growing, the interest rate is going to be lower than that. I'm not going to worry about it. And if the interest rate starts moving up a lot and looks like it's going to stay up, then I worry about it. I do not think a lasting multi-year shift to 3% is going to ruin the yield curve.
So let's conflate this. Blanchard and others, Stiglitz has mentioned it often, R minus G is key. That interest rate as it's related to growth, if the growth's there, everything's okay. Do you believe that what we're misjudging is a technological overlay which is going to give us better productivity, better growth, so we don't have to sweat R minus G?
No, I think we're misjudging the extent of the R risk, the extent to which R can jump. I'd love to have G jumping. I'd love to see a product.
Do you model, and with all your work at Peterson, do you model G jumping, or do the inflationistas completely underestimate the R dynamics?
I'm not quite following, Tom. What I think what we've seen is that you look back at the data, if you've got a large economy with a stable government and issuing debt in its own currency, R stays below G most of the time. If you look at U.S. or Western European or Japanese history, you get R jumping usually when there's a political problem. And that's where I worry about the U.S., not some threshold as was being mentioned. I worry about it because when it stops being credible, you're here in Washington, stops being credible that we can pass debt, that we can pass, a budget, that we can raise taxes if necessary, that we can get out of from the stupid debt limit. When that stops being credible, that's when R jumps.
So I want you to speak to Secretary Yellen now and everybody else managing this in real time. To Lisa's important question before, you don't have a concern about the sum of our debts right now and the trajectory of them?
In response to Lisa in that question, what I always say is it matters a hell of a lot more what you spend it on and how fast you spend it over time than the level of
How are we
debt.
doing at that?
What?
How are we doing at spending it constructively?
The January package was overshooting. That's a place where I agree with Summers and Blanchard. The January package was too much handouts. But what's in the investment packages that are now under consideration in Congress would be well-spent money.
John?
That was the argument that Larry was making, though, that pushing that forward would take all the oxygen out of the room to enable us to push this one forward. And ultimately, that's what we're bumping up against right now. And what's amazing about this moment for me, and for people that love this material and love this content, they're students of it, is to hear from someone equally as talented, Mohammed Ali, earlier in the morning, taking the other view on all of this, on inflation. And Adam, the question I often ask people is, what's the tell? What do they need to see to say, you know what, maybe I'm wrong about this? What would the tell be for you, Adam?
For me, the tell would be one of two things. Either that we get no real wage growth over this cycle, meaning that we keep having inflation outpace wage growth. That would say, okay, this is all for naught. And so you might as well just go with as hard a money as possible. The other tell would be a large jump in real rates. A large jump in long rates. Now, I think what's going on with my friend Mohammed and others is they're already missing the tell that should have told them to reconsider. Look at Japan, look at U.S. Their views do not explain and cannot comprehend why rates stayed so low for the last 15 years.
Next time, we need to get you on together. Adam, it's great to catch up, sir, as always. Adam Posen of the Peterson Institute. Tom, that's the framing of this debate right now. Mohammed Al-Iran on the one side, Adam Posen on the other, and they've got company on both sides. Good company, too.
It's good company. This is what it's about. When we invented Bloomberg surveillance, folks, you get the top minds here, and they agree to disagree. I would emphasize they have some very constructive overlays where they jointly agree.
From New York and D.C. for our audience worldwide, this is Bloomberg.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners.
This is your Bloomberg.
The world's financial decision makers connect on the Bloomberg Terminal, sharing ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
Bloomberg Real Estate Report brought to you by Exogen. A lot of reasons why the prices of new homes may go up again. Heavy demand, of course, in general. And on top of that, lumber prices are starting to rise again, and supply chain issues are making it harder for builders to get that and other supplies they need. David Marcotte, Senior Vice President of Global Retail and Supply Chain at Kantar, says between China to the U.S. to whatever warehouse you're putting supplies in used to take anywhere between several and 30 days. But
now it's anywhere between 90 days and 250.
And Marcotte says the problem won't be easily fixed for manufacturers of homes and just about everything else.
That stretching of time is really a reflection of all the multiple places where labor is not available to speed up the process and to make it right.
And all this and the shortage of labor in the home building industry could push up the price that builders charge for new homes even more. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Burden LLP Accountants and Advisors presents Tax Chat with Lisa Goldman, partner and leader of Burden's International Tax and Advisory Practice.
If you're a high net worth individual with international investments or a business owner with operations overseas, it is essential to have a tax advisor who knows how to protect your assets on a global scale. Owning and investing in foreign corporations comes with certain tax responsibilities. Burden Accountants and Advisors works with clients to ensure that they understand the intricacies of the global market, maximize the tax opportunities available, and reduce the challenges presented by international tax laws.
If you're a high net worth individual or a business owner, let Burden help protect you, your family, and your business. For more tax chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
Connecting decision makers to a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
A decision is expected as soon as this weekend on more COVID boosters. An FDA advisory committee kicks off a 2-day meeting this morning to consider approving vaccines from Moderna and Johnson & Johnson. The CDC could weigh in by next week. President Biden is trying to get a handle on bottlenecks involving the shipment of goods to the U.S. Miguel Almaguer reports from the Port of Los Angeles.
These massive cargo ships are waiting to unload thousands of pounds of goods, everything from electronics to bicycles to that Christmas gift you may have gotten for someone.
It's linked to pandemic-related problems with the global supply chain. Speaking at the White House yesterday, the president noted the ports of Los Angeles and Long Beach are running 24/7 operations in an effort to reduce supply ship traffic jams. More than 10,000 John Deere workers are on strike today in the Midwest. Most began picketing at midnight over their contract. Others will start this morning. They're all demanding more money. The walkout is affecting 11 factories in Illinois, Iowa, and Kansas. I'm Michael Kastner.
There are reporters who live for a great business story.
What actually worries you, though?
It is another fascinating piece of reporting.
They work here.
It is a fantastic story.
Bloomberg Business Week, weekday afternoons at 2 Eastern on Bloomberg Radio.
Climate risk is a financial risk. Countries all over the world have recognized it. But in the United States, we seem not to have fully taken this on board. And I'm very concerned that the chairman of the Federal Reserve has not taken on board the real risks associated with climate change to our financial system, to our banking system.
Good morning, everyone. From Washington in New York, Bloomberg Surveillance on Bloomberg Television, Bloomberg Radio, the laureate from Columbia, Stiglitz, with a ferocious defense of the International Monetary Fund and the managing director, Georgieva. This has been something with bank earnings and all, a bit off our radar in this week of international economics, but now we dive full into it. And it is good that we can do it with Vitor Gaspar. He is Fiscal Affairs Department Director at the IMF, but that fancy title barely describes the respect for the balance sheet worldwide that world leaders have for the gentleman from Portugal. We're thrilled he could join us in our studios. Welcome to Bloomberg, Vitor.
Thank
Wonderful
you so
to have
much,
you.
Tom, for having me.
I want to go to the issue at hand, and I know you do not speak for the managing director. That would be inappropriate. But to your fiscal model, you talk about strengthening the uncertainties that are out there within our fiscal process. How does your IMF prove through your department, your PhDs, its data integrity in the coming weeks and months? How do you show, not tell?
Data integrity and analysis integrity is absolutely core for us. I'm very proud of my colleagues in the Fiscal Affairs Department, and we have a very robust process to ensure data integrity and the soundness of our analysis. It involves both our department, but also other departments that in the review process vet our data, vet our forecasts, vet our analysis. I think that we have one of the most robust processes of vetting in the world, and we're always striving to improve. For example, the Independent Evaluation Office reviews how we conduct our business, makes recommendations. Those are addressed to management, they're analyzed in the board, and we make constant progress in the way that we produce data and analysis.
The joy of what we do here is we just had Adam Posadon from the Peterson Institute with a spirited conversation of our fears of inflation, and that devolves right over to fiscal affairs in the balance sheet. Can we have a normal discussion of inflation given the excess balance sheets we have from this terrible pandemic?
The uncertainty that we're facing has exactly to do with the pandemic, as you put it. The fact that we have dislocations in the balance between supply and demand is creating bottlenecks in specific sectors and price spikes that may last for a while the economy rebalances and makes its transition to a new growth path. In a situation like that, central banks, if inflation and inflation expectations are well anchored for the medium to long term, should look through this transitory price spike and conduct monetary policy with a steady hand.
With fiscal affairs, the leaders of these institutions and frankly world leaders are going to turn to you with the overarching question: can emerging markets do better in crisis now because they have better fiscal affairs. And it does fold back into the governance of the IMF and the World Bank and other institutions, G7, G20 as well. Can you report through your research that emerging markets are more fiscally sound now than they've ever been?
Emerging markets, like all country groups, are very heterogeneous inside. We point out to risks of divergences in the recovery, and inside the country groups, probably the most heterogeneous of all country groups is the emerging markets. We emphasize very much in the fiscal monitor that you just quoted the importance of strengthening the credibility of public finances. We recommend to all countries that they should maintain or build the credibility of their fiscal frameworks because it pays off. How does it pay off?
Right.
It pays off in terms of better financing conditions for the Treasury. It pays off in more flexibility to get financing when it's needed. It's therefore a precious insurance mechanism to have in times of stress like COVID-19.
Then there's China. Explain to us from your chair the transparency of China and your observation on the speculation in real estate in China and what it does to their fiscal structure, both government and private.
Let me focus on the issue of public finance transparency in China. We have published preliminary estimates on the basis of the global debt database that covers public debt, non-financial corporate debt, and household debt. And one of the challenges that we face in the case of China is looking at what is exactly public sector debt, what is non-financial corporate debt, that is private debt, given the role that state-owned enterprises, given the role that local governments' financial vehicles...
Are you confident in that transparency right now, or at least the trend to improving transparency?
I believe that the Chinese authorities have been improving transparency, and they're very committed to improving it further, and we look forward to work together with the Chinese authorities to do just that.
We are out of time. We have an exceptionally busy day in New York with bank earnings and such. I'm pleased to report to you, sir, the American banks are profitable. I hope that'll make the day better at the IMF. Peter Gaspar with us. He is with the IMF and truly has changed our worldwide debate on the balance sheet and on fiscal affairs. Lisa, James Gorman darkens the door here in a bit. That will be an interesting conversation.
Especially because on the earnings call, he had this to say about the potential Fed taper. He said that it will obviously be a slightly more turbulent market going forward. They are not complacent about that because of the potential tapering in bond purchases, which will happen at the end of this year, at least according to Fed meeting minutes. I got to say, this was a pretty powerful set of earnings releases, and there are a number of really big takeaways. What was your biggest takeaway, Tom?
My biggest takeaway is the magnitude of fear. We may get some difficult earnings, but I'm not sure they're going to be, to use the phrase, the crater that so many talk about. I could be wrong on that.
No, and certainly for the bank earnings, it is anything but that. I'll tell you my big takeaways. First, advisory fees absolutely knocked it out of the park. Record fees across the board, basically companies combining M&A massive, and you're seeing that borne out. To me, the fact that Bank of America saw its credit card book expand was really significant. There's incipient signs of perhaps some consumer growth, consumer loan growth. That also is a big deal in equity trading, also knocking it out of the park. The big question is, though, in my mind, is how much is Bank of America getting market share versus a widespread increase in the balance sheet of consumers?
My big question is, I'm going to be at some fancy foreign embassy, Lisa, at 10 o'clock tonight, and all I'm going to ask is for them to put on Giants-Dodgers.
Oh, yeah? Is that so? You're going to be there at 10 o'clock tonight? You've got to be somewhere tomorrow morning.
No, down here, I'm living
You're
the
living?
Emery Horton hours.
Okay, so everybody watch out tomorrow. Tomorrow we'll see Tom Keene after
tomorrow, Friday, we'll continue from Washington and New York.
The Alzheimer's. The world's financial decision makers connect on the Bloomberg Terminal, sharing ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
Association and the Ad Council present the story of Tom and Levi.
Tom is the smartest man I know.
He's been a professor at 2 major universities, been a teacher for over 40 years. One day, he told me that he was having problems in his classes. I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. And he was telling them that he was doing it as a favor to them, but I think in reality, he just wanted to get out of there. I was really starting to worry because I saw something was wrong.
Levi and I talked about how it would change our lives, but he was there beside me, and my love for him was just immense.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
For the Jewish Communal Fund, past president Noel Spiegel.
People often ask me why it's important to use JCF for their charitable giving. I tell them that JCF has a profound impact on our community. Thanks to the revenue generated from our funds, JCF makes an annual $2 million grant to UJA Federation of New York and makes grants from our endowment, the Special Gifts Fund. This year, we proudly granted more than $800,000 to support a kosher food pantry at Mid-Island YJCC, Jewish daycare at the Ed Alliance, a renovation at Camp Oakhurst, and an intergenerational Holocaust program at Ramaz. I'd like you to hear about our impact from a past Special Gifts Fund recipient.
Plaza Jewish Community Chapel is most grateful to JCF for supplying seed money to start the organization. Almost 10,000 families have relied on Plaza to provide an affordable yet dignified Jewish funeral.
Let JCF maximize your impact. Visit jcfny.org or call 212-752-8277.
This is a Bloomberg Money Minute. You may be waiting in line a bit longer for that holiday gift this season. A new study by workforce management specialist UKG says about 85% of retailers feel supply chain distributions and a scarce supply of workers will affect customers. More than half say they'll be understaffed at least one day a week during the holidays. It looks like stocks are on track to rebound despite those supply chain woes. U.S. futures pushed higher after Wall Street snapped a 3-day losing streak with the tech-heavy NASDAQ leading the charge. Dow, S&P, and NASDAQ futures all up around 1%. In the pre-market, Bank of America shares rose about 2.5% after reporting better than expected third-quarter results. And are you looking to change careers? Head to